Markets is a new chapter for the central bank, some fresh thinking. What we've given markets and households and businesses, I think, is a commitment to ask ourselves hard questions such that we can deliver on the promises that we've made before. This is a lot of change for financial markets to digest.
Joining us now for more is Humphery-Jenner in Sydney. He's an Associate Professor of Finance at the University of New South Wales Business School. Good to see you, Mark. Now, President Trump appointed Warsh specifically to slash borrowing costs, yet Warsh's first move was a massive hawkish shock. And Trump says he's fine with it for now, but how long can this honeymoon last before the White House starts taking aim at the Fed once again?
Well, firstly, thanks for having me. And it was an interesting first meeting. Indeed, I think that Kevin Warsh felt like he probably needed to signal that he wasn't going to be excessively dovish, because there had been fears that Kevin Warsh was being put in there just to cut interest rates, even though inflation is very high, which is why we saw them keep rates on hold. And specifically, he referred to the dot plot and did not offer a forecast of his own. So referred to the dot plot, which had 9 members forecasting a potential rate hike, 8 members forecasting rates being on hold in 2026, and only 1 forecasting a rate cut, which would have made it incredibly difficult for Kevin Warsh to try to strong-arm the Fed into cutting rates. Now, in terms of President Trump's rhetoric surrounding this, it will remain to be seen in future meetings. After all, in the current meeting, we still had the turmoil in relation to Iran. But if, for example, inflation starts heading down and the Federal Reserve still remains hawkish, it's quite possible that President Trump will start browbeating the Fed again.
And Warsh has put inflation front and centre even as oil prices have eased following this agreement between the US and Iran. Is he right to remain this concerned about inflation?
It's absolutely right for them to be vigilant about inflation. After all, throughout 2026, we've seen on again, off again, truces and ceasefires in the United States and Iran, and we are heading in the right direction. It looks like a ceasefire, but of course, it's too early to say it is necessarily going to stick. So the Fed absolutely needs to be cautious and vigilant about what might happen going forward, which is why they kept rates on hold and why many of the members were thinking that rates will remain on hold for the moment.
Humphery-Jenner in Sydney, great to have your insight. Thank you.